lot of Malaysians don't like the Malaysian stock market. In this video, we're going to investigate what are some of the reasons. So, to start off with, the comparison would always, especially in a globalized economy, would always be the United States. Too busy to find stock ideas? Check out Fire Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description. So on your left, you can see the percentage, right, of market capitalization. I assume this is the S&P 500 of nominal GDP. So it's usually, close to 3 times the size in terms of market cap. Whereas for Malaysia, that number as of 2023 is only at about just under 100%. So it means that it could be a combination of a few things, but it means that our stock market has not kept up with GDP growth.
Yes, exactly. Then you can see that the clear trend is that the US is always growing, but the Malaysian market is always dropping.
Yeah, there you go. So 2014, it was, back in the Najib days, it's close to 150%. Now it's 100% or 92%.
Okay, so there's a reason why, and this is actually depicted from Tong's portfolio toolbook. I'll read it out for you. Poor earnings growth, it is the biggest reason that the local bourse is a chronic underperformer. In the long run, stock prices are driven by underlying earnings and why valuation on average are low compared to, say, US stocks. And also, he did mention that more than half of Bursa-listed companies, included high-quality ones, are trading below net asset value. That is below the value of the company if it is liquidated. So what that means is investors are not confident that the country can resolve the persistent structural problems in the economy. Very, very heavy words. Goes to show you that Tong also is quite of slightly disappointed on our Malaysia stock market because of a lot of these, corruption.
So to summarize, what I was saying is that actually the fundamentals, the earnings, it's not exactly the problem. The problem is investor expectations.
Yes, investor expectation.
Because like he says, right, more than half of Bursa listed companies, like including high quality ones, are trading below net asset values.
Yeah. Also included the earnings as well, because it is the main driver for the stocks to go up. So that's why what it means is that I think companies are investing in businesses that don't generate returns on investor capital that is better than what they are doing. Basically, what he's trying to say is that basically companies are diversifying their business, and also in some cases they don't even create shareholder values.
Yeah,
and we'll dive deep into the reasoning behind why is such a case. So first, there's a few news that we can see over here. So number one, which is the airport or MAHB. There's these independent directors that say that it's very unfair for the company to take private at 11 ringgit per share because they have a lot of good assets and also good aviation network around the world. So they think that 11 ringgit is unjustifiable. However, there's a lot of investment bankers say that, although it is unfair, but I think we still should take it private just for the sake of making our airport to be run by a better, you can say it's like a better company.
International company.
Yeah, so that they can improve on everything. But why it is always undervalued is because there's less resources that is poured back to airport. I mean, you can see that even the airport train also has not been up and running for quite a long time already. All this will be painting a very, very bad things to the tourists, for foreigners who are visiting in Malaysia. So yeah, it needs to have some sort of improvement. Second one, which is MPC. This one, it is a palm oil company, and they are going through this privatization. And what this privatization, right, it is they did mention that they want to privatize around 2 ringgit and 80 cents a share, at least, minimum. But then if you look at their net asset, it's about 5 ringgit. So they are going into a very steep discount, and people are just trying to say that whether this is fair pricing for minority shareholders. Because imagine if, let's say, the minority shareholders bought above that price, right? But then you are getting private 50% discount of your net asset. So yeah. And then the third one, which is Pentamaster. I think this one also another one. They listed in one of their business or subsidiary in Hong Kong. But that Hong Kong one, it is trading at 10 times earnings. In Malaysia, Pentamaster is trading at 40 times. So yeah, this goes to show that even international companies, they see this type of Malaysian companies not so valuable, so that's why they are giving it at a very low valuation.
Mm-hmm.
So yeah, all of these are signs that why Bursa Malaysia is underperformer. So and this is the number one reason. There's five. So this is the first one. Falling behind. This is a news on the tech space itself. So what it shows over here, it is that while Southeast Asia tech is growing, it's heavily concentrated on tech equipment manufacturing, with relatively little focus on advanced AI research due to lack of deep R&D infrastructure, venture capital funding, and skilled talent pool. So this is already a huge major problem for the tech guys. I mean, if you look at the R&D spending for most of our local tech players, right, it has not been a lot other than Vitrox and probably Frontend also. So yeah, the reason why they don't spend on R&D is to make more profits. I mean, when you don't spend, you make more, everything flows through to the bottom line. So what this happens, right, after for many years of not improving or innovating your machines or even keep retaining your talents, right, it will result some sort of stagnation, and also possibly your valuation will go down. Assuming like your competitors are the one that has been spending the most and they are capturing your customer base. So that is what we have been seeing in the case of the tech guys. Even Vitrox also, who spends a lot of R&D, are getting their market share eaten by Chinese players. So yeah, this is really pretty evident because the management themselves also admitted that the tech space is very competitive. It is a very tough space to operate. Maybank Investment Bank also did say that they do not anticipate a meaningful follow-through for local semiconductor public listed companies in the near term to medium term. The reason is because our tech firms lack the domestic back-end exposure to emerging AI platforms. Because all of these Chinese customers that they are serving, they all are becoming more self-reliant. So what it means is that our tech guys are not up to date in terms of their latest technology, and they cannot ride on this AI wave. I mean, they are spending money. Even our Malaysia government also has been spending like 25 billion to improve our tech guys to move up the value chain, but it's still going to take some time. Yeah, it definitely is not going to be a 1 year thing. It's going to be probably a 2 to 5 year thing, depending on how fast our tech guys can operate. So number one, falling behind. Number two, family-owned business. So there's a term called pyramid structure. It's where when a family owns about half of a public listed company, and then they own another company at its underlying assets. So this one, they give a lot of power, obviously, to the majority shareholders, and they can do a lot of very sneaky things, like paying yourself a lot of money, dividends, or maybe even do some sleazy related party transaction that we don't know of. Or it could be like an off-balance sheet thing.
And
also.
I think in Asian countries, they always focus on the family first. So it's family first, then shareholders.
Yep. And usually also when they have like a lot of cash pile, they won't, not all, but some, they will keep the cash for themselves instead of like giving money to the shareholders, or maybe even reinvesting it to their business, even though they know that there may be some opportunities, but then they just don't do it. Don't know why also, but that's just how it is. So number three, shareholder value. Now this is a leak from our Fire Pro write-up, one of the companies that we covered, which is SAB. And this is a tiny sneak peek about it.
Yeah, I think a big one is dividends, right? If you look at companies that do well over time in Malaysia, it's always change in dividends first, and then maintaining high dividend payout. And I think once a company does not show that, especially if they got good cash flow.
Yeah. So in this case, right, there's a few companies that we mentioned here: PPHB, Kesing, S-Bagan, and also SAB themselves. They have a net cash of 50 to 70% over their market cap. So that's actually a very big chunk of like cash, but they never like increase the payouts. This shows like the management is just very stingy, just like that, and they are not creating shareholder value. Number four, underperformers. Now this is the IPO for 2024. Now you can see that the number of IPO stocks that drop in terms of share price on the first day to IPO price. The first day, this one I think is fine, which means that 80.2% of the IPO stocks are making money.
90.2, you mean?
Sorry, 90.2, yeah.
But then, go up basically, right?
Yeah, who go up. But
as time passes, it drops, yeah.
Yeah. So what does this tells us is that, I mean, the numbers are
Yes, yeah.
just inflated. It's either inflated or there's just
Hype lah. There's a
it's
lot of hype now. Yeah.
Yeah, correct. And
So
they cannot deliver after that.
oriented copy shareholders, pay attention.
Yeah. Okay, number 5, liquidity.
This is more of the result rather than the cause. Because foreigners maybe, well, I think a lot of things. I think one is the size very big for foreigners, and then the second thing is it's very they don't have visibility basically.
And also there's a lot of macro analysis that comes in to their research, because they also need to see the political stability of our country. They also need to see corporate governance. So whenever there's like MACC case propped up, then they will be more cautious and they will just straight away sell out their position without thinking twice. And it's also the reason why the foreigners are very like, you can say that they are like a day trader or something like that because of such things. Like they're just uncertain with Malaysia's prospect. It's not so strong. So that's why like one day they are in like 1 billion, the other day they are net seller, and then the following day net seller again. So yeah, it has not been like going back to the highs of 2011 to 2018 where they own about 24%. Now it's like below 20%. So yeah, those are the 5 reasons, and here are the takeaways. So number 1, I think good corporate governance is very rare in Malaysia, especially companies that are very transparent in terms of their numbers and all of those stuff, right? Or maybe even like sharing some information that minority shareholders want to know. So I think this one, we are still very far from it. Management, although there is some that they are open to share, but there's still like 90% of them are still being very secretive about it. Don't know why also. Yeah, maybe bad thing they don't share, but good thing they just share only lah. It's just how Malaysia works. It's also apply for the other countries as well, but especially Malaysia, we are very secretive lah. So I think in order to attract more foreigners, we need to have good corporate governance.
Yeah, transparency.
Yes. And number 2 is CEO mindset. A lot of our CEOs over here are business owner instead of investor. So what business owner wants is basically they want to grow their business organization size as large as possible and pay themselves a big fat salary. But if you are flipping it into like an investor cap, right, all of these things are not creating shareholder value. I mean, number 1, if you increase your organization size, it means more expenses will be incurred, which will hurt your profits and cash flow, right? And one more is that you are not really improving your returns on invested capital. Who knows, maybe that existing business that they are trying to grow is actually very poor. Like for example, property development, business. Yeah, a lot of like business owner, if you look at the listed companies, right, they like to diversify into property development for some reason. But if you diversify that in the 90s, I think that's a good move, because back then the returns on invested capital is very high. I mean, because also the land was quite abundant, which means that you can expand. You can see there's like an expansion growth. But right now, land is getting more and more scarce also, and there's more developers over here. So the competitiveness today, as compared to the past, is getting more and more intense. So that's why the prices are getting lower. Your returns also will be getting lower. And also another thing, which is just now we share about the dividends, or maybe even share buybacks, for instance. A lot of these businesses just don't like want to give out dividends for some reason. Probably they just want to pay out a lot of salaries for themselves instead of like outside shareholders. So yeah, I think if a CEO that has an investor mindset, I think it's very rare. And if you do find it, you can maybe even hold it and keep it around. So yeah, that's the second one. And the third one, which is innovate. This is also depicted from Tong's portfolio, this graph, which is creating a new S-curve to sustain growth over the long term. So basically, business cycle, they will go through like waves one, but the only way that it's going up is when they actually, manage to generate either getting more sales from different countries, or maybe even capturing from other competitors, right? Or you go through like some sort of vertical or horizontal integration. So vertical integration is basically you own the upstream, midstream, and downstream. Horizontal, it's you are doing like M&A. You are buying into other business that is maybe related to your core business, or maybe it's unrelated. And that is where you can create S-curve. So you can see like many companies, like for example, QL Resources. This one is I think one of the key one. They have been like deploying their capital very efficiently. Always when they buy a new company like Family Mart, for instance, they do it very well. They plan it for 2 years before even executing. So yeah, you want to find like management who can create like new S curve. So besides QL is MFCB lor. But right now, so we don't know whether the future of MSCB is still bright because of Dong Sa Hong. They are relying a lot of the cash flow from that particular segment. So yeah, these are the three things are key in order to have a better valuation in terms of like stocks in Malaysia, and also to attract more foreigners. But on the bright side, yeah, this is an interesting chart that we have.
Yeah, so for this, I think you might be asking, like, because we invest in Malaysia heavily as compared to foreign companies. And then you might be saying, okay, you're saying all these bad things, right? So does this mean that we all should get out of Malaysia? The answer is no. Because at the end of the day, we have been repeating this many times, and that is, you invest in an area that you can understand. And earlier on we talked about how management needs to change. Right? A lot of it comes down to management, not just the country. I think it's also an attitude. China, for example, the government always pushes, is aggressive on R&D and all these things, but management can behave differently. Singapore, right, very similar. So it's not just a Malaysia problem, right? It's an Asian problem, I would say, with the exception of maybe Taiwan, because they are more like they're quite Americanized in that sense. In any case, there's actually tremendous opportunity in Malaysia. In fact, this very knowledge that we've given you is precisely why we think you can invest in Malaysia. Because you can then now you know indirectly or subconsciously what actually works in Malaysia. And what actually works in Malaysia is this thing called catalyst. It's something we talk a lot about in our Fire Pro program. And what these catalysts do is it actually changes the direction of the company. For example, we know that there are a lot of companies trading under net asset value. I know Tong mentioned that a part of it is the country. Yes, that's the expectation. But a lot of these companies with net asset values above the market cap don't have the attention of big investors anyways, whether it's foreign or local. But the reason why they stay under net asset values in terms of market cap is because the main shareholder don't want to unlock it. But if you know this, and if you follow the market as closely as we do, then you'll be able to identify companies when they do unlock the value, either through selling a poor asset, underperforming asset, or paying dividends, or a combination of both, or a business owner, acquiring a majority stake in a company that has better returns on capital than the existing ones. Now, once you know this, plus the typical usual earnings growth and all that, that's where you get the chart we have in front of you. Now, what people don't understand is that as a group, more than 10% of companies in Malaysia actually grow more than 10% in share price. And some actually grow 20, 30. If you're good, you can find those that grow way more than that, right? Your job as an investor and our job as investors is to find these 10%. So just to show the math to you on the right, the light blue, 131 companies in 2023 grew more than 10% a year. And so you just have to find these guys and to expose your portfolio to these guys. And that's how you can actually do well in the Malaysian market. And precisely because corporate governance is not as well developed as the United States, you can also have information edge because you get to know things pretty much ahead of time. All because, not because you have connections, of course connections can help, but also more importantly is that you work hard. We always give the example of MSM, right? This company, they had a TikTok where they said they were going to increase subsidies for the sugar prices, right? Yeah. Then there was also articles coming out. No one acted on it. The share price still didn't move. We did, so then we profited from it. So it's all about putting the extra effort.
Yep. So if you want to discover the
where these companies, where you can increase your chances of finding these companies, that's where Fire Pro come in, and that is a chart that we didn't do. That was by Bloomberg, but in essence, that's what we've been trying to do.
Yes, correct. And you can see like some of the companies even went up like 3 times.
Yeah, more than 10%.
Yeah, more than 10% definitely, and 3 times, 200 plus percent. But yeah, if you want to know behind of these censored companies, what stocks that we have initiated for each of the portfolio. So we have the Malaysia, Global, and also the boring. Malaysia, it's obviously Malaysia.
Mhm.
Global is from
Global,
the outside,
non-Malaysia.
yeah, US, your China, Vietnam, all of those companies. TB, which is the boring portfolio, if you want dividends and also cash flow,
Mhm.
they are more conservative. You can check out these boring portfolio. And each of these, we also do a write-up on it so that you can understand a
Yeah.
company better.
Speed up your research and understanding.
Yes, and yeah, and potentially if you like the company, you can even act on it. So yeah, if you want to see how we do our write-ups, there's a free sample for you. The links will be in the description and comments below. So that's about it for today's video. I think Chinese New Year is coming soon. So
Yeah, those celebrating Happy Chinese New Year.
Yep.
And we'll see you in the next video. Bye bye.